Dear students, today we will solve one example of cash flow statement in Advanced Accounting and Auditing Paper 6 for TY BCom Semester 5, Veer Narmad South Gujarat University. Here is the question. We have a balance sheet of XYZ Limited as on 31st March 2015 and 2016. On liability side, we have preference share capital, equity share capital, securities premium, capital redemption reserve account, general reserve, profit and loss account, current liabilities, proposed dividend, and provision for tax. On asset side, we have plant and machinery, long-term investments, goodwill, current assets, short-term investments for less than 2 months, cash and bank balance, and preliminary expenses. Additional information. Number 1. Preference share capital was redeemed at a premium of 10%, partly out of proceeds of 10,000 equity shares of rupees 10 each issued at 10% premium, and partly out of profits otherwise available for dividend. Number 2. The company purchased a plant and machinery for rupees 95,000. It also acquired another company's stock for rupees 25,000 and plant and machinery of rupees 1,05,000 and paid rupees 1,60,000 in equity share capital for the acquisition. Third information, foreign exchange loss of rupees 1600 represents loss in value of short-term investments. And last, number 4, the company paid tax of rupees 1,40,000. From this additional information and above balance sheets, we are asked to prepare cash flow statement as per accounting standard 3. Dear students, first of all, let us observe the balance sheet. On liability side, preference share capital on 31st March 2015 rupees 4 lakh and on 31st March 2016 rupees 2 lakh. It means during the year company redeemed preference shares of rupees 2 lakh, and as per adjustment number 1, it is provided partly out of equity shares proceeds and partly out of profits available for dividend. Here we have issued 10,000 equity shares of rupees 10 each. It means rupees 1 lakh. So for provision of capital 2 lakh, 1 lakh rupees is from the proceeds of equity shares and remaining 1 lakh is taken out of general reserve and it is transferred to capital redemption reserve account. Here we can simply check the balance of capital redemption reserve account is rupees 1 lakh. It means out of general reserve 1 lakh utilized for redeemable preference share capital. Further, we have redeemed preference shares at 10% premium. So there will be a premium of rupees 20,000 and this premium will be written off against securities premium account. Here we have issued 10,000 equity shares of rupees 10 each at 10% premium. It means we are going to receive 10,000 rupees as a premium. So in securities premium, opening balance 40,000 plus 10,000 premium on proceeds of equity shares, so it will be 50,000 minus 20,000 preference share redemption premium, so closing balance will come to rupees 30,000. So like this, our preference share capital and securities premium account will tally. Now next, equity share capital. Here opening balance 4 lakh, issue for redemption of preference shares for rupees 1 lakh. So there will be total equity share capital 5 lakh, but in closing we have 6 lakh 60,000. It means further transaction in equity share capital is for rupees 1 lakh 60,000. It is there in adjustment number 2, that company acquired another company's stock and plant and machinery, that is 25,000 and 1,05,000, and paid 1,60,000. So here 25,000 plus 1 lakh 5,000, 1 lakh 30,000, and company is paying 1 lakh 60,000 in equity share capital. It means remaining 30,000 is paid for goodwill. We can check the balance of goodwill account. There is no opening balance, but closing balance of goodwill amounts to rupees 30,000, and this 30,000 is the result of adjustment number 2. Now here we have capital redemption reserve account. It is clear. General reserve account, out of 2 lakh 1 lakh utilized, so closing balance would be rupees 1 lakh, but here it is 1 lakh 20,000, and there is no other additional information. It means during the year 20,000 rupees transfer from profit to general reserve account. Profit and loss account will be taken for operating activities, and difference will be considered as a net profit. Current liabilities, proposed dividend, and provision for tax. Okay, plant and machinery, we will prepare separate account. Long-term investment, there is no additional information for long-term investments. Opening balance 3 lakh 20,000, closing balance rupees 4 lakh. It means investment worth 80,000 were purchased. Current assets will be taken for operating activities. Short-term investments 50,000 and 84,000. There is an adjustment number 3. Foreign exchange loss of rupees 1600 represents loss in value of short-term investments. It means this loss is recorded in profit and loss account. So while preparing cash flow statement, we will reverse the entry for foreign exchange loss, and our entry will be profit and loss account debit to investment account. So by preparing cash flow statement, 1600 rupees will be added in profit in operating activities, and the same 1600 rupees will be added in closing balance of investment account. Now cash and bank will be considered while preparing cash flow statement. Preliminary expenses, opening balance 40,000, closing balance 20,000. So difference 20,000 is written off during the year. Here is the outline of solution. First of all, we will prepare necessary non-current accounts having adjustments effect. Then second, we will pass necessary journal entries for non-current accounts having hidden adjustments. And finally, we will prepare cash flow statement. Adjustment number 1. Preference share capital redeemed at a premium of 10%, partly out of proceeds of 10,000 equity shares of rupees 10 each, issued at 10% premium, and partly out of profits otherwise available for dividend. Here we have prepared redeemable preference share capital account, equity share capital account, securities premium account, and general reserve account. First of all, we take balances. So in redeemable preference share capital account, opening balance credit side rupees 4 lakh and closing balance debit side rupees 2 lakh. In equity share capital, opening balance credit side rupees 4 lakh, closing balance debit side rupees 6 lakh 60,000. Securities premium account, opening balance credit side rupees 40,000, closing balance debit side rupees 30,000. General reserve account, opening balance rupees 2 lakh on credit side, closing balance on debit side rupees 1 lakh 20,000. Now effect of adjustment number 1. Our first entry for redemption of preference shares. So preference share capital account debit rupees 2 lakh, premium on redemption account debit 20,000 to preference share holders account rupees 2 lakh 20,000. So here in preference share capital account debit side, to preference share holders account rupees 2 lakh, and our preference share capital account will be tally. Now for redemption purpose, company issued 10,000 equity shares at 10% premium. So our accounting entry will be bank account debit 1 lakh 10,000 to equity share capital account rupees 1 lakh to securities premium account 10,000, and our posting in equity share capital account credit side by bank rupees 1 lakh and securities premium account credit side by bank rupees 10,000. Further, company utilize 1 lakh rupees out of general reserve and transfer to capital redemption reserve account. So our accounting entry will be general reserve account debit to capital redemption reserve account rupees 1 lakh and posting general reserve account debit side to capital redemption reserve account rupees 1 lakh. Next, premium on redemption written off. So our accounting entry will be securities premium account debit rupees 20,000 to premium on redemption account rupees 20,000. So securities premium account debit side to premium on redemption account rupees 20,000. And finally we will make payment to preference shareholders account debit rupees 2,20,000 to bank account. And now except equity share capital, rest 3 accounts will be closed. So securities premium account will be tallied with rupees 50,000. General reserve account, there will be a balancing figure of rupees 20,000 on credit side. This is nothing but profit transferred to general reserve during the year, and our accounting entry will be profit and loss account debit to general reserve account rupees 20,000, and our account will close. Now we will solve adjustment number 2. The company purchased plant and machinery for rupees 95,000. It also acquired another company's stock of rupees 25,000 and plant and machinery rupees 1,05,000 and paid rupees 1,60,000 in equity share capital for the acquisition. So our accounting entry for purchase of plant account debit to bank account. So here we have prepared plant and machinery account, and opening balance on debit side rupees 7 lakh, closing balance on credit side rupees 8,20,000, and posting for plant of purchase plant account debit side to bank account rupees 95,000. Now we have purchased another company's stock and machinery. So total 25 plus 1,05,000, 1,30,000. But we are paying consideration in equity share capital of rupees 1,60,000. It means remaining 30,000 is paid for goodwill. So our accounting entry, stock account debit 25,000, plant and machinery account debit rupees 1,05,000, goodwill account debit 30,000 to equity share capital account rupees 1,60,000. So posting in equity share capital account credit side by stock 25,000, by plant and machinery rupees 1,05,000 and by goodwill rupees 30,000. Plant and machinery account debit side to equity share capital rupees 1,05,000 and goodwill account debit side to equity share capital rupees 30,000. So after making posting, our equity share capital account will tally with rupees 6,60,000. Goodwill account will tally with rupees 30,000, and plant and machinery account on credit side we will get balancing figure of rupees 80,000. This will be treated as depreciation on plant and machinery. So our accounting entry will be depreciation account debit to plant and machinery account rupees 80,000. Now we will pass journal entries for remaining assets and liabilities having no adjustments. First of all, proposed dividend 31st March 2015 1,60,000 and 31st March 2016 2,10,000. So last year proposed dividend will be paid and current year proposed dividend will be provided, and our accounting entry will be for last year dividend, proposed dividend account debit to bank account rupees 1,60,000, and this entry will be recorded in financing activities as cash outflow. Current year proposed dividend profit and loss account debit to proposed dividend account rupees 2,10,000. This particular transaction will be added in profit in operating activities. Now next, provision for tax. Students, we have adjustment number 4 for provision for tax. Last year tax paid rupees 1,40,000. Here our last year provision is 1,50,000. So out of 150 our liability decided 1,40,000 and it is paid. So here our entry for last year payment, provision for tax account debit 1,40,000 to bank account 1,40,000. This particular amount will be added in profit will be deducted in profit in operating activities. Now for remaining amount 1,70,000 we will have to make provision. So profit and loss account debit to provision for tax account 1,70,000. This will be added in operating activities. Now long term investments, it is increased by 80,000, so it is purchase. So our accounting entry will be investments account debit to bank account rupees 80,000, and this particular amount will be recorded in cash flow statement as a source in financing activities. Next, preliminary expenses, it is written of rupees 20,000. So our accounting entry, profit and loss account debit to preliminary expenses account rupees 20,000, and this particular amount will be added in profit in operating activities. Now we will prepare cash flow statement for the year ended 31st March 2016 as per accounting standard 3. Cash flow from operating activities. Dear students, here operating activities will be calculated by using indirect method. So first of all we will take net profit during the current year by taking difference between closing balance of profit and loss account and opening balance of profit and loss account as per balance sheet, which is 45,000. Now we will give the effect of adjustments of non-operating items recorded in profit and loss account. First, proposed dividend for the current year rupees 2,10,000 will be added in profit. Transfer to general reserve rupees 20,000. Provision for taxation made during the current year rupees 1,70,000. So here we get net profit before tax rupees 4,45,000. Now in this profit we will give effect of adjustments non-cash items recorded in profit and loss account. First, depreciation on plant and machinery added back rupees 80,000. Foreign exchange loss rupees 1,600. Dear students, foreign exchange loss was recorded in profit and loss account, and due to which our profit was decreased. So here we will have to reverse the effect. So added back 1,600, and from closing balance of short term investment in closing balance of short term investment it will be added back. Preliminary expenses written of rupees 20,000. So by adding these three items we get operating profit before changes in working capital rupees 5,46,600. Now we will give the effect of changes in current assets and current liabilities. First, increase in current assets, that is 11,41,000 minus 9,10,000. Closing balance minus opening balance. So increase will be deducted 2,31,000. Now we have acquired stock of another company. So it will be recorded as a receipt rupees 25,000, and this will be added. Then increase in current liabilities, that is closing balance minus opening balance, so plus 2,60,000. So after giving effect of current assets and current liabilities we get cash generated from operations rupees 6,600, and from this 6,600 we will deduct income tax paid, that is of last year rupees 1,40,000, and finally we get net cash flow from operating activities 4,60,600. Now we will work out cash flow from investing activities. First, purchase of plant and machinery as per machinery account minus 95,000. Purchase of investments minus 80,000. So our net cash flow from investing activity amounts to 1,75,000 negative. Next, cash flow from financing activities. Issue of equity shares from equity share capital account rupees 1 lakh. Securities premium on equity shares issued rupees 10,000. Dividend of last year paid 1,60,000 negative. Preference shares redeemed rupees 2,20,000 negative. And our net cash flow from financing activities amounts to rupees 2,70,000 negative. And now we have three amounts: cash flow from operating activities 4,60,600, cash flow from investing activities minus 1,75,000, and net cash flow from financing activities minus 2,70,000. And finally, net increase or decrease in cash and cash equivalent amounts to A plus B plus C, that is 15,600. Now in this amount we will add opening balance of cash rupees 1 lakh and opening balance of short term investments rupees 50,000. My dear students, here short term investments are considered as cash equivalent, that is 50, and closing balance amount to rupees 1,65,600, and it is like cash and bank balance 80,000 and short term investment rupees 85,600. It is something like 84,000 given in balance sheet plus 1,600 foreign exchange loss, that entry we have passed. So 85,600. That's all. Dear students, thank you very much for watching this video lecture. Very soon we will meet with another sum on cash flow statement.